Hi everyone, I'm Victoria, and today we're going to talk about COVID's impact on retail investing. Before we start, I want to nuance that the pandemic has uniquely affected the financial situation of each retail investor, and for some, these were definitely hard times. And during the uncertainty and the hardships, the pandemic affected retail investors in many other ways, such as sometimes lowering their savings for important goals or, it imposed significant expenses. But today we're going to talk about why we're calling 2020 the year of the retail investor. So the year 2020 began with a market crash in the beginning of the year, reaching its lowest point in March, followed by an impressive rally down the road to the pandemic recovery. So let's start with some numbers here. In 2020, 10 million Americans opened a new brokerage account. In January 2021, 6 million Americans downloaded a trading app. Early 2021, retail investors in the US generated about as much equity trading volume as mutual funds and hedge funds combined. So this really shows that there was an impressive growth and growing interest in the popularity of retail investing and trading apps in 2020 and early 2021. Now let's have a closer look at why that happened. First of all, some people were left with extra cash thanks for stimulus government checks and more time on their hands with office closures and layoffs. There was also the prevalence of user-friendly investing apps that made money transfers more seamless, the gamification of investing, and access to real-time information and increasingly accessible, sophisticated investment tools, even for common retail investors. We also saw appear new investors' profiles. So on the one hand, young first-timer investors with limited discretionary income, not yet knowledgeable and easily influenced. On the other hand, there was also a second type of profile, so more experienced investors with more money at their disposal. They tend to hold accounts with traditional wealth management firms or other online brokers, but now they decided they want to try it on their own. The thing that both of these profiles have in common is that for both, social media tends to play a big role in how they make investment decisions. So social media brings this element of crowd wisdom in their overall portfolio. Now, what are the consequences of this surge in retail investing? Well, financial institutions developed more educational tools to promote financial literacy for self-directed investors. There was the rise of new digital trading platforms and no minimum investment accounts, and or add to that zero commission trading, so really pushing down the barriers to entry on the market for retail investors. There was also consumer protection that became a priority for market regulators, so looking forward to see how these topics are going to evolve in the future. Thank you for listening.